Good afternoon, everyone. Scott G here with The Simple Trading Life. Welcome. This is our Monday version of our live stream, and looks like we are going live right as ES is starting to take a little bit of a reversal here. We've got less than 1 minute on this candle, so we'll see how everything plays out on it, and we'll look at a few things today. We'll look at the price action from earlier today. We'll also look at our watch list and see how that has played out. So let me bring up your comments. Wow, it says we've got several of you in here already, so welcome. So where you see me say hello down there, that's where everyone can type their comments or questions, anything you have there. Let me slide this across. So it is 2 o'clock on the dot, and we've got several in here already. Hello, Jose. Good to see you. Glad you could join us. Awesome. I'm glad the audio is good. So we'll get started as normal. We're looking at the E-minis of the S&P 500 here. Hello, Kelsey. Good to see you joining us as well. Thank you. I appreciate that. Hopefully everybody in our community shares with others, and we just continue to grow our community. For those of you who've been in here for a while, and when I say here, I should talk about the simpletradinglife.com community, our free chat room. It's really starting to explode here in the last, I'd say 3 weeks, 3 to 4 weeks. We're just growing by leaps and bounds. So thank you so much to those of you who've been sharing with your friends and sharing on social media. So as we start this 2 o'clock candle, you can see we just put in what is sort of like a hammer. I'd like to see that wick be bigger, of course, but this is clearly showing that price tried to go higher. It couldn't do it. You see we got up to 32.26.25. Now, in fact, I think it was you, Kelsey, that asked earlier in the day if we were going to be able to make it up to around 32.27, and I said, yes, if we break and hold this gray structure area, we had a good chance. And as you can see, we got close, right? 32.26.25. So we got up very close to 32.27, and then sellers came in, they pushed back down, and right now this is current price. So we're waiting to see, are we going to get continuation and keep pushing lower? Okay, and if we do, right, we'd probably be looking to get back down into this wick somewhere. Let me get rid of this. This was not a trend line. This was to gauge momentum. Well, actually, let me cover that first. I'll cover that real quick. Let's see. Hey, Grayson, good to see you there. Yeah, I got so close to your profit target. Okay, yep, that's right. Okay, so before I take that off the screen, I want to show you why I had it on the screen in the first place. Let me squeeze this in. All right, so earlier in the day, and this goes right back to the start of regular trading hours. So earlier in the day, I was showing everybody, and I told everybody in the room, and if you're not in our room, check us out at simpletradinglife.com and click on the free chat room button. Come on in and check us out for free. But I alerted everybody in the room today that early I was looking for a move to the downside. Okay, and here is what I base that on. First of all, we've been moving pretty strong to the upside for some time now. Okay, we can go back about a week, week and a half. It's basically just been climbing its way higher and higher and higher. All right, so if we go back till the opening of today's session, which was yesterday at 6 p.m. Eastern, okay, and then this is the opening candle of regular trading hours today, you can see that, although price was vacillating up and down, the overall trend was to the upside. However, if we look down here, and those of you who've been with me for a while, you know we use RSI to gauge momentum. We do not use it for anything else. We don't care about overbought or oversold because it can stay either overbought or oversold for a long time, right? Okay, but what we are looking for is something here that is known as a negative divergence. Okay, price was moving up, the trend, but momentum was trending down. Okay, so they were going apart. They were going apart. That typically says, okay, typically that tells you that you may be ready for some sort of a downside move. I was looking for it earlier in the day because also on Twitter, we had all these people, and some of them, you know, and don't get me wrong, obviously we've moved to the upside, but we had all these people on Twitter calling for price to go higher. Okay, some people that are knowledgeable, some people that are not so knowledgeable. Okay, man, you know, we're going to just blow the top off of this thing and, you know, whatever. So I kind of figured on open that we would probably see a little bit of a spike to the upside, and then they would try to trap overeager bulls, mainly retail traders, and then take it down. Okay, well, look right here. That is exactly what happened. Okay, if I make it a little bit bigger here so you guys can see. Okay, here was our opening candle. The first move was green, and then they brought it back down, and then it waffled right around here for quite a while, like right to about the bottom of this candle. It was red, but it really wasn't doing much, and then all of a sudden it went right down to the 20. Then it bounced back up to like right in here again. Then it went down to the 20 again, and then over here it actually went a little bit below, and then we started our climb to the top. So what happened there was that was a perfect shorting opportunity. So you guys in my community, you know, I showed you my trades from this morning. Even though the move today has been to the upside, we are up $34 on the day. Okay, meaning ES is up $34 on the day. I've only taken 6 trades today. Every single one of them has been a short, and I'm 6 for 6. So that is counter trend trading, right? But I know where the opportunities are, or at least I feel like I do, right? So I'm looking for an edge. I'm looking for something that others might not be seeing. So most people right here, okay, they were thinking when they saw that going green, they're thinking, hey, we're about to, you know, take off. But I had already alerted you in the room what I believed. Okay, and I was convinced enough that I took the trades that they were going to try to fake everybody out and then drive the price lower. So where I set my my profit targets were just above the 20 here, just above the 20. And what happened? They went right to the 20, then it bounced, then it came back down again, then it actually went a little bit below. Then we got this move, all right, and then over here, you see this? So this is what we call a break, retest, and go. Now I can remove this because, again, this was just on there to show you the divergence of momentum. Give me a second. Okay, there we go. All right, so here was our level at 3,200. Once we broke through, as soon as you see price starting to come back the other direction, it's highly likely when you break through a key level like this, plus it's a whole number. Besides the fact that it's a key support and resistance level, it's a whole number, which makes it even more important. It went up, it retests, and then it goes. That's what we call a break, right? Break, retest, and go. Okay, so again, I took the short back. I think I'm going off memory, but it's in the room. You can see them. Where did I exit? 3,225 or something like that. It was right around here, okay, because I didn't want this bounce to go against me. Okay, so again, took shorts, even though the momentum was up. To me today, oh, look at this over here. Price is really starting to drop. And it's almost back to the 20, which is also confluent with the 3,200. Okay, so we'll watch this as we're going through this analysis as well. Okay, so right there was the change in momentum. It got up to close to that 32.27, which was a key level on the daily. All right, which makes it a really strong level. Okay, it was a key level on the daily, 32.27. And again, remember, price does not have to hit things to the absolute tick. It may reverse like here before it gets there. It may go past it a little bit and then reverse. But just knowing where those areas are is what's important. Okay, same thing for like levels of structure. Okay, look at price. It's really starting to push down now. If it can break through here, okay, then we're looking at opening price level. If it could break through opening price level, then we're looking at the bottoms of these candles and this wick right here, as well as this uptrending channel. And why? Because it's been respected. Okay, you see this? Once we broke back through it, okay, then it was respected. We came back to it and bounced right off of it. Okay, so far, the 3,200 level and the 20 are holding so far, but we're going to watch. Okay, so back over here. So again, although the trend has been to the upside today, every trade that I've taken have been shorts because to me, they were the highest probability trade, right? So I didn't want to go here because I was afraid we'd get a bounce back here. But when this started to go this direction, this was a great short. It was a high probability short that you were going to at least go to this level. Okay, then we bounced higher, and then over here is where I took my last shorts. Okay, so when we got up here, we barely broke above this, and then immediately, look at this. Okay, we couldn't go higher, and when this started to go red, again, in my mind, at least down to the bottom of this candle was a high probability short. And what happened? It actually went down just below it. Then it came back over, and then we entered into the dead zone. This was the 11:30 candle, and we chopped here. Then we kind of came up. Then we pushed up higher, and then this is where we're at currently. Okay, so right underneath there could have been a good short. Okay, or if you're aggressive, and you were looking at the same levels we were, that 32.27 was probably going to be an area of resistance, then when somebody saw that come back through, because this was green at one time until it gets right there, and then it flips to red, that could have been an aggressive play for somebody. All right. But if we come back over here now, okay, there it goes. It's pushing through. Now we're going to test opening price level. So everybody's watching this in real time. Let's see, entered once the bottom of the range broke. Okay, for 25 cents, just sold one for 50 cents. Great job, great job. So you doubled. Now have a risk-free opportunity. Absolutely, great job, Kelsey. Okay, so she had two contracts. She sold one for double what she paid, right? She paid 25 cents. She sold it at 50. Now she has one. And she could get out, you know, again, you got to watch here. You got to, because this is a level, okay? And then down here would be another level. Why? Because this was a pivot area right here. So the bottom of this candles, these two candles here, into this wick, that's if it gets below opening price level. Opening price level is an area of support and resistance every day. That's why we market, right? That's why we market. Okay. Yes, you're welcome. You're welcome. It's a good job. All right. So, and look down here. What has momentum done? It's fallen off the side of the cliff, right? So I still left this. This was our downtrend from the overnight session. Look here. We broke back above it on here. But even with that strong move to the upside, I want you to look down here. Okay, this was strong, and then it just sort of flattened out. You see that? Then it just sort of flattened out. Now momentum has rolled over, and it's just sinking, right? And it's just sinking. So let's go back up here, okay, to this candle. And if you look straight down, I want you to see this. I'll draw it in for you. So from here, okay, to right there, okay, what was already happening? Even though this was choppy, you see this? Up, down, chop, chop, up, down. Although this looks flat, what was momentum really doing? It was trending down. It's giving you a clue. It's not the only clue. You add these things together. You add these things together. All right? So most of you know, okay, those of you who are in my community, I don't really like to trade in the dead zone because this is what happens almost every day, right? Just chop, a lot of low volume, okay, just not very good for trading. But you can still watch for clues for trades later in the day. Okay, this is the 130 candle, and then here was the 2 o'clock candle, just barely went up and then flushed down. Okay, so you could have been looking for something under there, and if you look down, again, momentum was already trending down, and then we just, boom, just fell off the cliff. Now, if I remember right, it's very possible that there is news, because it wasn't Chairman Powell, but I think somebody from the Fed was supposed to speak at 2 p.m. today, if I'm not mistaken. I'm not going to go look at it right now, but I'm pretty sure somebody from the Fed was speaking today at 2 o'clock. And if that's the case, obviously the market did not like what they had to say, right? Obviously the market did not like what they had to say. So we flushed down. We got within a couple of ticks here of opening price level. Now we're bouncing. So if anybody was short, okay, you definitely want to take your profits. You don't want to let this go against you. Now what I typically do, just like I did this morning, okay, right here, it could have broke through there this morning, but my short trades on this opening candle, my target was just above here because I don't want to see a bounce like this, right? Or a bounce like this. Okay, same thing here. My short trades coming down here were just above here, right? Because I don't want this bounce to go against me. This short trades, I think there was 2 of them. My target was really right around the bottom of this candle because I don't want a bounce to come down and go against me. So my philosophy, if you're new, is even if we get a big move, I try to take it out in conservative chunks, right? So this morning I had an awesome morning. I'm most likely not going to take another trade today. There's no reason to, right? 6 for 6. Good winners, good solid day, and for those of you who are new, I talk about this all the time. You have to understand percentages. So I'm typically about a 60% trader, meaning 60% win rate. Okay, some days I might be 75%, some days I might be 50, right? But I'm typically right around a 60% win rate trader. So if I'm 6 for 6 this morning, what do the odds say, right? If typically over a wide range of trades, I'm a 60% trader and I'm 6 for 6 right now, the odds are going down for me, right? Because it's not likely that I'm going to go 10 for 10 or 15 for 15. That's not likely. That's not even reasonable, right? Can it happen? Anything can happen. But the odds for me go down, right? Because I've already hit my, if I take 10 trades, I'm typically going to win around 60 or 6 of them, and I'm already 6 for 6. That means if I just continue to trade, the odds are going against me. Right? Now, I can have a good day, right? I've had days, and you guys who've been in my community, you've seen it. I've had days when I've won, 75, 77%, things like that. But those are going to be rare, right? And I want to play the probabilities. It's just as easily I could have a day where I only win 40%. And then things average out to 60. So that's why I said earlier today, again, if you're new in my room, some people, they might be saying, man, well, you're on fire. You should just, you should be, increasing your position size and you should be going more and more and more. Nope, that's not me. That's not my style. My style is to be conservative and know what the probabilities are. If the probabilities are with me, right, then I'm going to continue to trade. If the probabilities are against me, then I'm going to step back, whether I'm winning or losing. And if you want to be a consistently profitable trader, you've got to get that psychology in your mind that win or lose, okay, either way, you have to understand the probabilities and you want to put them in your favor. So just because you're winning, that doesn't necessarily make the next trade a good trade. So just remember that. Yes, that's it, right? The odds are that the next trade would be a loss. And it might not be, right? Again, could I go 10 for 10? Could I go 15 for 15? You could. It's just not very likely. So why push the envelope and risk giving back something? Because that's when people get euphoric. That's when they get overconfident. Then that's when you make a mistake. And you don't want to make mistakes. Okay? All right. What I'm going to do is I'm going to set an alert down here. And then I'll set one higher. And then we're going to go look at today's watch list, which I have not looked at, so I have no idea what the things have done today. All right, so this one is for below. And then I'll set one kind of up in this range, and then we'll know whether price starts to move one direction or the other. And we'll look at some of the names on our watch list. There we go. So got some alerts set. Okay, right here at opening price level, and then right here kind of at the bottom of this structure level. Okay, stopped out for profit. Great job. Stopping out for profit is still a win. Is still a win. Green is better than red any day of the week. All right, so let me get to a daily chart. And then let me get back over to our room. Okay, this is our community, and I've got to scroll way back so I can find this morning's watch list. So you guys just bear with me for a second. We've had a lot of interaction in the community today, which is awesome. We really like that. We got some new members that have come in, and I think they're fitting right in and they feel comfortable, and that's awesome. That's what we want. Okay, here it is. All right, so let's look at some of the names on our watch list. First one will be Apple. I'm just going to take them in order. We may only do some of them. We may do all of them. And then I'll tell you guys like what we're looking at, where the triggers are. Okay, so here's Apple. I'm going to squeeze in just a little bit more. All right, so our trigger was actually at 389.06. And we went as high as 399.82 before price then reversed and worked its way back down. So we went up over $13. Yes. Wait, let me look here. Yeah, 389.06. We went up over $13 on Apple to the good. Huge winner. So even if you wrote it up and then it started reversing against you and you only made $12, you only made $11, or you only made $10, that's still a huge win on Apple. Okay, huge win. So our trigger, right, this was an inside candle. That's the setup. The trigger is if it opens inside of this, it's once you take out the top, or if it gaps above and goes positive, meaning in your direction, that's your trigger immediately. So 389.06, you know, even say 389.10, whatever. And then it went all the way up. You're not going to catch it right at the top. Highly unlikely. You could, but highly unlikely. But then when it starts to reverse against you, at some point you should have been trailing a stop up. Okay, or it gets up there and starts to go back against you $1 or $2, you just exit, right? Hey, like I said, if you make $12, $11, $10 on Apple, that's a huge move. Huge. All right, so there was a big winner there. Next one is Baidu. Let's look at Baidu. All right. Okay, so here's Baidu. Now Baidu gapped up, but then came back down through. So there's two ways that you could play this, right? This is an outside candle. All right, but it gapped up. So this isn't the definition of, the folks in my room know what I'm talking about when I say single candle power reversal, because that typically starts inside and takes out both sides. This started above, right? And the whole move has basically been to the downside. So there's two ways of playing it. You can just go ahead and take it as it comes back down through here, right? You can take it up there if you want, or you can wait till it comes all the way through and takes out the bottom. That's the conservative play. But as you can see, even that, okay, your trigger would have been 130.27, and it's been as low as 128.27. So that's $2, right? Already $2. And ES is starting to drop, I can see. All right, this is still dropping. So that would still be going in your favor. Okay, Baidu. Let me go back to ES real quick. And then we'll come back to the watch list. Get back over to the 30-minute. Okay, so it obviously, you see that before it hadn't got below. Now it has. Now it has, right there. It spiked below, that's what triggered our alert, and then it bounced back up. So we'll watch this just for a second, or you know what? I'm going to set an alert right down here at the bottom of these candles, because that's where I said if we can get through and hold opening price level, that's the next likely place for price to go. So let's just do this. Okay, we've got it. I'll show you. See that? Right there, level with the bottom of these candles. So now we can go back, and if we hear that alert go off, we know that price is really starting to plunge, which it does look like it's trying to do. All right, so we had Baidu. Let's go to the next one. Crowd. See, we got several new people who've joined us. Welcome. Make sure you give us a thumbs up and subscribe to the channel. Turn on that notifications bell. That'll notify you anytime that we are live or put out new content. Okay, so Crowd's the next one on the watch list. Okay, so Crowd's a big winner today. All right, here's our inside candle. Okay, so we started right up here and then we went immediately to the downside. So your trigger is taking out the bottom here at 115.41. And we're already down at 110.62 right now. It's been as low as 110.49. So almost a, is that 5? Yeah, almost a $5 move on Crowd. Okay, and look at the size of this candle compared to everything else. This is one of the bigger candles on the screen. That tells you that thing paid big time. So another big winner right off the watch list. All right, next one, Cisco. Cisco. Let the chart load here. Let my Thinkorswim kind of settle in. All right, not much. We got we did get a little bit of a trigger there, and then it came back through. So the folks in my room who trade price action, they know what this means. So even if you took that there, okay, because it opened here and it went this direction, you would have probably stopped out coming the other way, but you can re-enter right here. So if price goes one direction and comes back through opening price, so your trigger there would have been 46.87, and it's been as low as 46, wait a minute here, 46.87 and 46.55. So that's not a huge move. That's not a huge move. But it would have been to the positive, right? It would have been to the positive. These candles can be deceiving on Cisco, right? Because obviously they're not moving much. Like this one right here, this whole candle is just $1. This big looking candle, that's $1. That's why you have to check, right? You got to check. Like over here, this is the biggest candle on the screen, and it is not even a $2 candle. So that's not even $2, even though that candle is that big. All right, so you just got to kind of watch. All right, next one, Facebook. Facebook gave us a big winner the other day. Let's see if it gave us anything today. All right, so here was the open on Facebook, and it looks like it originally went this direction. So this could have been 2 trades. And again, the price action traders in my room, they know what I'm about to talk about. All right, so because it was gapping up above this inside hammer here, as soon as it was going that direction, you're in. Okay, so the trigger was 247.01, and it went as high as 250.15, so over $3 that direction. Then price reversed. You're going to exit when it starts coming back down, right? So it went up $3. Maybe you make it out with $2.50 or $2 or whatever the case may be, right? But you should have had a nice winner to that side. Then you can re-enter when it takes out opening price level, and you would still be in right now. So you would have entered at 247.01, and it's been as low as 243.56. So basically about $3.50 this direction, and it's still going. And it's still going. So this is how you can get 2 trades on one name if you understand price action. Right? So there would have been a nice winner 2 different directions on Facebook. GDX, let's take a look at it. Now, GDX is the gold miners ETF. All right, nothing. See this candle here? It hasn't been able to get outside of the top or the bottom. It's barreling down towards the bottom, but we would have no trigger on this yet. So this would be a no trade, right? It doesn't affect you at all because you wouldn't be doing anything yet. IBB, okay, we got 3 ITFs right in a row. Okay, so IBB, this is the biotech ETF. We'll see if we've got anything on it. All right, so it opened down here. Your trigger would have been right here when it went to the upside earlier. All right, so your trigger was 140.87, and it went as high as 142.68, so not quite $2. But as you can see, look at the size of the candles. A $2 move on IBB is a good move, right? That is an easy winner right there. Then it reversed. Now if it comes all the way back down through and this turns red, you could enter going the other direction. We are getting later in the day though. I always caution on entering a trade too late in the day, especially a new trade, meaning you haven't been trading that name all day. When you start talking about, especially the closer you get to 3 p.m., remember we're on the daily right now. Okay, it's got to have time to play out. Now, there's no reason, right, that you can't turn red there and then really start to flush. You could, okay, but it's just not as likely later in the day on these normal names. All right, so another winner there. Next one, IWM. It's another ETF. All right, so your trigger on the gap up. So this has went both ways. There could have been 2 trades here today. Okay, so on the gap up, your trigger 142.80, and it's been as high as 144.64. So again, not quite $2 that way. Then when it came all the way back down through and started to go red, you could have took the trade the other direction, and it went almost $2 to that side, and then it came back up, right? So you probably would have made about $1.50, $1.25 each direction. Just being conservative, because right, when price starts to come back against you, you're either going to stop out or you're just going to exit out and take your profits. So you could have had a trade this direction and a trade this direction on IWM. Okay, TTD. Let's see if that gave us anything today. Sometimes this thing will make nice moves. All right, so we had a gap up. We had a gap up, and when it went that direction early, 468.64 up to 475.67. 64.67. That's a $7 move. That's just, look at this little wick. So you already know where I'm going to go with this on the downside. We had a $7 move to the upside. Then when it reversed and came back through opening price, you enter that way, going the other direction. And 468.64, and we've been as low as 445.20. So that is 20 would be 65. That's over $23 to the downside. $7 to the upside, $23 to the downside. I'll go back and look at ES here in a minute, Kelsey. It obviously must be tanking because you notice most of these names we're looking at are tanking and they're probably following the market. But those of you who like a name that moves, see, look at these candles. They seem smaller, but again, from here to here, that's 23 bucks, right? And that little wick is $7. So it's optically, it's like an optical illusion. Sometimes you'll have big candles on your screen like we showed you on that other name, and a big looking candle was $1 the entire range, right? This is a $30 range right through here. But that's a big winner. TTD has gave us big winners here recently. All right, Twitter. Let's look at Twitter. And I will go back to ES in just a second. All right, Twitter went up. Okay, so from here, 35.72 to a high of 36.21. So that's 50 cents that direction. Then it came back down through. This is a single candle power reversal right here. Started inside, took out this side, and now has taken out this side. The downside move would have been triggered at 35.72, and it's been as low as 34.68, so over $1 to the downside already. Single candle power reversal. You start inside, you take out one direction, then you reverse and you go all the way back through and take out the other side of this inside candle on one candle. All right, let's go back and look at ES. We don't have to go through all of them. As you can see, almost every name except for one today on the watch list has been a winner, and most of them big winners. So those of you who like equities, and I don't even trade equities that much. I mostly trade futures and forex. But I give you the watch list because all the same principles apply. Okay, look where we're at. Yep, here we go. Look at this. I don't know why my thing didn't trigger. See that? My alert never went off. Thinkorswim for you. You know, what's the use of having an alert if it doesn't go off? All the way back down, this is the uptrending channel, the upward trend line channel. And where that comes from, I'll show you. Let me squeeze this back in. As we've been trending up, okay, some people, okay, I marked it way back here. You guys remember this. I marked it way back here is when I started this channel. All right. Some people like to go off the bodies. Some people like to go off the wicks. I use that adage, like if I'm only drawing one line, it's typically just wherever the most touch points are, because there's nothing magical about these lines. You guys already know that. But in this case, because we had this clear delineation, I drew one off the bodies and I drew one off the wicks. Always ignore your outliers. Always ignore this one outlier, because look, everything else is here and pretty much everything else is here. So that gave us our channel. Now we come back through. Okay, that's how long this channel's been on there, is since back here. This is when I drew it in. Then we made this M and we came down through it. We came back up and tested it. We came back up to test it. Couldn't get through. Then we came back, got to the upside of it, right? And now we came back to it and we bounced and went higher. And now we've come back to it, and so far it's holding. You see this? It may or may not hold, but that would have made a nice target for somebody, right? So let me look. Yeah, Kelsey, I didn't see your target until just now. If I would have told you my target would have been right here. Okay, this would have been my target. It still can go lower. I'm not saying that it can't, but you want to be careful. We just had this nice strong drop with this big candle here, borderline chaotic candle. All right, and all a chaotic candle is it's going to be, it's generally going to be way bigger than any candle on your screen. This is definitely the biggest one. It's borderline. I don't know that I would call it chaotic. It's just a large, wide-ranging red candle, but you can see so far we're catching support right here in this upward trend line channel. Awesome. Great job. Great job. That's the way to get out and take that profit, because look what's happening. See the bounce? Okay, so Kelsey has been in our room for a while now, and she's really starting to get better at understanding, because like, look here. This would have been a big red candle, and then it took that big bounce. So you have to assume until something different happens that when it gets back down here again, that is a possibility. And look what it's doing. It's bouncing big just like this one did. But she got out with profit, and that's the main thing. Not about to ask for more when I'm having such a great day. Exactly. You're content. Great traders are content with being green. And they understand some days it's going to be a big day, other days it might be a smaller day, but they are content with being green. They don't make bad decisions based on, well, you know what? I really want it to get down here. Right? Because it may never get down there. Look what's happening right now. Right? That's why I leave these lines on here for a while, because once we got back above it, now it's being respected again. A trend line can sometimes be like support and resistance in terms of it may break through and go below and stay below it for a while, but then once it gets back above it, if it breaks back above it, right, then it starts bouncing off of it again. Okay, so something is support and resistance until it's not. Great job. Great job. I'm glad you're having such a great day today. All right, so we had the big drop, and then boom, now we're flattening out. You see this down here on momentum? We're flattening out. Even though price has taken a big bounce, so far this hasn't started to bounce. Right? It's just flat. Now what could happen, right? We could get a big bounce here, and then the very next candle, which won't be for about another 18, 19 minutes, the very next candle could turn around and come back down and try again, right? But it also could, we could put in like a hammer here, and the next candle could we could form a V, right? We could get a V bounce right here. That quickly. 3 candles down, 2 candles up. It could happen that quickly, right? So we just don't want to put ourselves in bad positions. That's what we mean, for those of you who are new, that's what we mean when we say we trade price action. We let price dictate to us and tell us a story of what is going on, both in the recent past, and we can go back even further in the past. You always want to give more weight to what's happening now, like in the recent time frame here. And when I say recent time frame, I'm not saying like the 30-minute, the 5-minute, whatever. I'm just saying in the recent history of price action, that's always the most relevant, but you can't ignore what has happened in the past. You can sometimes go back years. Like there can be times when price leaves a certain level and it might not go back to that level for 2 years. And then when it gets back to that level, it rejects again. 2 years later, right? That's not by coincidence. And people who tell you that it is, I'm not going to badmouth anybody, but they're just not, they don't understand how price action works. Okay, so we'll just watch this just a little bit more. I won't keep you guys on here too much longer. I definitely wanted to show you kind of what had happened during the day, why I took the trades I did. And again, all of mine were shorts today. And I did not take anything here. If I would have been looking for anything, it would have been right under there. Right under there. And I definitely would have not had this all the way down here for a target. My target would have been right here just above this 3,200 level. That would have been it. Right? And if it does go all the way down there, so be it. Right? Okay, so I would have missed this part of it, but that is the conservative play. That is way more likely, right, to happen to there than what it did happen. right? Because look, that's the biggest candle on the screen. So you can't play, let me articulate this to you. You can't make trades based on the exception. This is an exception, right? What do most of the candles look like? Just look at them. Look at the sizes of most of the candles. So if we break below here and then break below this box, down here, right above here would be the next likely target. It's also over in this wick here, right? So I would have, if I would have been in, my take profit target would have been just above this level. And if it goes right on through like it did, now you guys know, you watch it in real time, it actually bounced there first, waffled for a while, then it went through. But if it goes right on through, so be it. No FOMO at all. You lock in the conservative, high probability plays, and you just pile them up, pile them up, pile them up, right? That's the better play. That's exactly why I took profits at the 20, and then when it went below the 20, I re-entered. There you go. Yeah, you can always re-enter, right? I talk about that all the time. You could always re-enter a trade if it continues in your direction, or if you get stopped out because you might have taken a little bounce against you and then comes back your direction, you can always re-enter. Now, especially, I know not everybody in here trades futures or forex, but futures and forex, there's no PDT rule. You can trade as much as you want every day, right? So I've said it in here before. There's been many times, I'm just going to make something up. Let's say I wanted to enter right here, and I did, and it came back against me, stopped me out. Then I re-entered again, came back against me, stopped me out, and does it 2 or 3 times. And then this happens. I don't care. Well, why do I care, right? These were small losses, and that's a huge win. That's playing the probabilities. Your analysis was correct. Every once in a while, you're going to get this, even once it triggers. It may come back against you a little bit, may even stop you out, and it may do it a couple of times, and then you get the drop you were looking for, right? And it takes patience. Patience. Don't worry about it. Like so many traders, and some I've even worked with in the past. I had a gentleman that I used to work with, and he would get so angry when he would get stopped out. And I would be like, dude, what are you getting so upset for? Well, I lost. My analysis was right, but I lost. And I'm like, why didn't you re-enter? Because he was playing futures. Why didn't you re-enter? Well, because I didn't want to get stopped out again. And I said to him, I'm like, so what? What if you get stopped out 2 or 3 or 4 times? But you're only losing a few ticks, right? A few ticks each time, and then this goes exactly the way you thought it was going to go. Because that's why he would get really angry. Something like this would happen. This little wick here would stop him out, and then the trade would go like this, and he would lose his mind. And I'm like, you have got to settle down, or you can't scalp. If you get that emotionally tied into a single trade, you best not be scalping, because this kind of stuff's going to happen to you all the time. You've got to not care. In fact, I try to teach people in our community, you've got to almost be like, yes, I stopped out for a small loss. You got to treat that like a win, right? I didn't let it go against me. I didn't take a big bounce against me. I got out. I can always re-enter. And if it comes back your way, you re-enter, and then you catch the move. That's it, right? There shouldn't be any emotion at all. And I know I've talked to some people before, and I've even listened to some psychologists talk about this. It is impossible to not have any emotion at all. I understand that. Okay, there's a trading psychologist. I can't remember his name right off the top of my head, but he occasionally puts out some videos and stuff like that. And he's a current guy. And he admits, he's like, listen, we always tell traders to make your trading unemotional and mechanical. And he's like, that is what the goal is. But we understand that as humans, we are going to have some emotion. But like he said, what you want to train yourself to do is, while you're in the trades, have as little emotion as possible. And then when you exit a trade and you've had a big win, that's when you're like, yeah, Yeah, that was an awesome trade. Not during, because then you're going to start making mistakes, right? When you're counting your chickens before they hatch, so to speak. Once you've exited, or same thing, when you take a small stop out, start training yourself to look at that as a positive. Yeah, I took a small loss. I could have took a big one. I took a small one. That preserves my capital, puts me in a great position. I can always re-enter if it goes back my way. And you just retrain yourself that way. So hopefully that helps somebody. Okay. Kelsey says, I know that guy. There's a lot of people that are like that, right? I think all of us have probably been like that at some point in our careers. I know I was, years ago. I used to be like the highest of highs and lowest of lows, depending on what would happen with the outcome of a trade. But individual trades shouldn't matter. It's all about, at the end of the day, whether you took one trade or 10 trades or 20 trades, at the end of the day, did you end green? Did you end profitable? Or did you end break even? Or did you end with a small loss? Those should be the only outcomes. Green, break even, or a small loss. You should never have a big loss. They will happen though. I mean, after all these years, I'll even have them happen sometimes. They can happen through mistakes. And what I mean by mistakes is like, I had this happen just recently, and you guys who watch my live streams know, I thought I was exiting a trade and I was actually adding on to a position. Right? I thought I was getting out and I added on to the position. One time, well, actually this has happened several times in my career. Thank goodness it only happens rarely. You thought you went short and you actually went long, or vice versa. And then you're not even paying attention to your P&L. This is why I say to people, a lot of people say, I never watch my P&L because that helps me not be emotionally attached. Well, let me give you one good reason why you should watch it. If you made a mistake, you would know right away, right? So if you entered short and you meant to enter long, or vice versa, you entered long right here when you meant to enter short, by a mistake in your mind, you thought you were going short, and then you're just watching this thing drop thinking, yeah, I'm making all kinds of money. All right. Well, if you're watching your P&L, you would know immediately when it's going your direction and your P&L's going red, you're going to be like, whoa, wait, what? I bought calls? Or I went long, right? And you can get out. But those people who don't watch their P&Ls, they get all the way down here. And I had a friend of mine have that happen to him, and it's happened to me before too. And now my friend, his was way worse than mine. But I've had ones like that cost me dearly. I mean, not like blowing an account or anything like that, but I mean dearly because I wasn't paying attention to the P&L. Well, that taught me way back then, pay attention to your P&L, right? That helps you. Like you make that mistake and this starts to go your direction and your P&L is going red and it should be going green, then it's going to trigger you to figure out what's wrong. All right, let's come back over here. Okay, it's sort of fallen into this hammer right here. We've got a little bit less than 8 minutes to go. I'm not going to keep you guys on here. We've been on here for a little over 50 minutes already, but wanted to show you guys that. Let me see here. Let me think if there was anything else. I know somebody was asking about levels. Let me show you. Okay, so the next level above, if price would clear this here, is 32.50.75. This is the top of an expanding range that we dropped back in and then we got above it, but I'm leaving it on there for now just in case we would come all the way down and drop back in. Okay, and then also levels to the downside, 31.41.50, 31.24.25, 31.15.50, and to the upside, let me see if there what might be above that one. 32.95. Okay, so the upside 32.50.75 and 32.95. These are support and resistance levels, and if you want to know how I come up with these, we have a video on our YouTube channel. It's a 2-minute videos on how to draw accurate support and resistance levels. Just watch that and you'll know how I pick these levels out. Okay, everybody, I hope you have an awesome day. And more than likely, we'll see you tomorrow around the same time, around 2 o'clock. If I go on earlier for some reason, I'll let everybody know, both via Twitter and in my community. Make sure you give us thumbs up, subscribe to the channel, turn on that notifications bell, and if you can, definitely join the room. It's absolutely free. 100% free. All the content is free. Just go to simpletradinglife.com and click on the free chat room button and come join us in the room. We'd love to have you. We'll see you. Bye-bye.